Welcome everyone to the Kendall Report. It is Monday night, and sorry for being late. There's a bunch of stuff going on here trying to figure out what's happening here in the world. And remember to subscribe, like, and share these videos and hit that notification bell. And we didn't do a good job last night. More likes, folks. Make sure that there's a like for every view. That would be awesome. Anyway, the title of this video tonight is called King Dower Destroys the World. And I haven't seen a Dower rally like this for a very long time. And this is such a unique situation. I went through the Dower last night in detail. We're going to go through it again because it continues to is causing a lot of dislocations of capital. You saw the story on Sri Lanka, right? They just completely destroyed everything that they're begging for money, from the World Bank now. And it's getting, that's probably the tip of the iceberg. There's other countries that are becoming very illiquid very quickly. And I'm not sure where this goes. I've been talking about a rally for the last several days. We've pressing everything right to the max here, right down to the 10-period moving average. I'll talk about this in the technicals tonight as far as what's going on in these patterns that are going on. And I just feel like there is something trying to emerge, maybe a surprise of some sort coming out of here. But today or Wednesday, we'll probably be into Wednesday before we really get the answer on this. I don't think anyone's going to make any big moves before the CPI comes out. And I don't think it's going to be hotter than normal, but it could be. We're in a very unique situation. And like I said, the Dower is driving everything. So let's talk a little bit about that, because yesterday we saw the S&P down 1.15%. Nasdaq ended up down 2.26, and then we had the Russell down 2.11. So we're really pressing everything down. I thought we'd get 2 days down, and then we should see a rally. So that would be tonight and tomorrow, and it should set up. There's going to be some critical numbers to watch here. But let's talk a little bit about the Dower. And somebody mentioned I'll cover the yen, and we'll take a look at some of these charts. Yen's over 137. Euro's almost pressing through parity. That parity trade, if you turn on Bloomberg for 5 minutes, that's all they're talking about, especially if you have the European version on tonight later. That's all they're talking about is going through there. I covered this in pretty much detail last night, but this is starting to really show where the weaknesses are on the planet. And it doesn't, let's just say, as everybody talks about the U.S. economy, everything, it's the tight labor market, all that stuff, it may not be as great as everybody's pointing out. And we could see it roll over pretty quickly here. So I'm on, I wouldn't call it a crash alert, but I'm in there's a very sensitive area here that has to hold, or we're going to see some big movements, and they're not going to be in a direction. It's been a couple times, if you recall, I've been looking for this little 3, 5, 8 day rally, and we can't get it. And in theory, I talk about this a lot. If you have a market that should rally and doesn't, then that tells you probably what you need to know. So like I said, I'm going to give it till Wednesday, depending on what numbers that we trade today. You'll see in a minute, we've already basically traded an R2 level overnight so far, and it's early in the session, just a few hours in. So, and a lot of that has to do with activity and things that are coming out of Asia right now. China's down a little bit. I watched the China Open, and just trying to get some context here so we can have a good setup as we come into tomorrow. Yesterday, 9 of 11 sectors were negative. Everything turned south, and even the big players, the Apples of the world, were under a lot of pressure. So there's, as I said before, there's no safe haven anywhere. And folks want to talk about defensive stocks and healthcare and utilities, those type of things. There's no safety there. And I'll also address the issue. I saw somebody in the comments before I got on screen here, is that I talked about if the yen went over 137, we'd probably see some selling in the U.S. Treasuries by the Japanese BOJ or the financial entity that would execute that. We didn't see that today. We actually saw interest rates come back in. I'll talk about that as well as I tie everything together as we get into the middle of this presentation tonight. I also think it's interesting, the China zero COVID policy. I'm thinking about this just for a minute. How do you have 1.4 billion people and not one person can be sick? Not one. And now there's 300 people. I saw some numbers, 300 reported sick, and they're shutting the country down again, shutting down Macau and all the casinos. And we saw the action in the folks in the U.S. companies that have operations there. It just doesn't make sense. And what is this really about? And I just wonder. I know this isn't probably a good thing to talk about, but I just wonder at what point do people just go completely off the map and completely revolt? How do you control 1.4 billion people if they don't want to be controlled? I just think it's a very dangerous world that we're in, and I'll just stop there because that's a dead end to go any further down there. But the point is that a lot of the action that we saw today was based on that. So all it has to do is, okay, we have some new home quarantine routine. I saw this on a report earlier today. They can home quarantine and then they say, okay, everything's back on. So do we rally then? Is it about the dollar? What is it going on? And that's why I was spending some extra time tonight trying to research what to actually talk about and what was actually going on in these markets right now. And I think this is another one of those pivot points where it feels really, really bearish. So this is one of those moments where you can make a very big mistake. So like I said, I'm giving it a couple days here. So let's go ahead and take a look at the database, talk a little bit about that, and then get into the technicals. So we did get just a little bit more traction here. We saw about 200 we saw about 250 buys. We saw about 350 sells, so slightly negative on one of the models and bullish on the other one. And so we're at 53.02, and I believe, I'm just looking at last night's report. I do believe that we were just a bit higher than that last night. So we're not really getting more traction, but we're remaining pretty stable even in a big down day. So that's somewhat encouraging from the standpoint of what's going on with the database. There's a lot of stocks here. We're basically 50-50. We got 8,557 long, and we have 7,581 neutral. And then we look at the sectors that are owned right now. Consumer cyclical is basically down 0.2. Healthcare is showing a little positive here, 0.8089, and that's 10 days into that trade, and the other are just 2 days in. So in the last 4 days, we've had 3 new sector buys. None of them are really going anywhere, but it's interesting that we're setting up some of these patterns looking like maybe we can get a little traction in these sectors. As it stands right now, if I brought up the intermediate, there's 0 sectors long and very few groups. In fact, let me just flash over to that just for a second here. And I think, so we're looking at zero sectors right now. And as far as groups, there are 10 groups that are currently long in the system. And, they're footwear, electric utilities, we've got beverages, major drugs, motion pictures, and schools. I guess Top Gun is driving that, and the new Marvel movie, right? So, but there's just nothing being held. This is on an intermediate basis. So out of 102 groups, we only have those groups that are actually showing anything. Let's go ahead and take a look at the technicals here. Okay, starting with the S&P, we're down 18. We were down to 35, so we're about 1 point off of the lows of the session right now. Let's take a look at, I was having issues with the data window here, so I may not be able to show you the same size data window that I usually show you. For some reason, it's not coming up. I'm absolutely hating Windows 11. So anyway, it was working fine just right before I started. So we'll go ahead and just take a look at this. Sorry, it's not bigger. We're looking at S2 right now, 38.25, and S1 38.42, and the S3 is 38.09. So if we get through this level where we're trading right now around this 38.25, we're just above S2. That should hold. What I'm expecting, at least an S2 R1. We basically yesterday got we never got close to the R1 yesterday. That was 39.17. Intraday, we traded up to about 83, 84, and then we reversed and actually made new lows coming into the close. It was a pretty ugly close, and it was being dominated by the algos yesterday. The algorithms were driving everything. We're still seeing reasonable configuration out of the PPMs here, and we're looking at PPM 1 is flat, basically 0.03. PPM 2 now is only minus 0.78. It is starting to turn up, and PPM 3 is slightly negative. So we're looking at the key support levels here at 38.11 and 38.43 is where we're going to need to remain above that on a closing basis. If we close below the 38.11, that's going to be a close under the 21. That's not going to be a good sign, but I still like expecting this pattern to have basically a 1, 2, 3 pattern here, where we should at least get up to this 40.53. So I'm going to maintain that same analysis I've been talking about until we get a close under that level. And in real terms here, I'm going to see if I can get this to draw. Let's do just a quick calculation here. I just want to see where we are in this pattern. And right at 0.618 is 38.16, 66% retracement of this is right at 38.05. And these markets tend to go to an extreme when they're in these type of patterns. So we're right on the edge of the cliff. We'll find out if we're going to fall through. If we do close under this, I'm just going to round it off to 3,800. That's going to be a potential for us to go back and retest the lows that we had about 8 days ago, which is back to that 37.40 level. And it just doesn't seem to me that we should come here from this pattern, especially with PPM configuration like this. So we'll take a look here at the Nasdaq next. The Nasdaq 11,806 is a key number there. We had a low of 11,805, and we're last at 16. And so we're looking at This also getting stretched to the max, but the PPMs here are much more positive. This has always been the case for months, as long as I can recall anyway, is that we get a slightly more positive PPM 1. PPM 2 is also stronger. It looks to me that we still have everything in the pattern to make this trade work, and we're going to have to close above that 12,000 level. So just need about a 200-point rally, and that'll set it up, and we should get into some of these Fibonacci targets here. High target one's 12.5. I went through these numbers last night, and 13,000 would be the next level. But it looks to me that we're, like I said, this is going to be, the next 2 days are going to be critical. We're going to need to at least stay above the 10-period moving average at 11,804. That's going to be important to stay above. And we're down, about 68 handles right now. So I'm thinking that on all of these indexes right now, we're just like the other night when we were trading higher, we were trading around the R2 level several days ago. I said that I think we're probably at the high of the session. I think we're probably at the low of the session right here, and we should see some improvement as we come in overnight. We'll see how Asia does, and then that'll affect the opening in Europe. And then there's actually just no news. I didn't talk about the news because there wasn't any that's coming out on Tuesday. So it's a completely flat day. Next day thing that we have is CPI on Wednesday. So markets, I think, are going to stay a little stable ahead of that. We'll see if we get any short covering or anything like that as we go through tomorrow's session. We'll start with the Russel futures, down just about 0.4 on the day. Same scenario across the board. PPM 2 is actually starting to finally turn up here pretty good, and PPM 1 is stable to flat, and so is PPM 3. So we basically are in this sideways pattern. The last time we saw a pattern like this was coming back in here back in March, and we finally got a little rally out of here, but this is just a really choppy zone. If I were going to draw in something, we really have this band, this sideways trading band that we're really in. We're not rallying and we're not really selling off. We're just trading in this range, and it continues across all these indexes to be in this range. Like we'll call it 37.5 to 39 on the S&P, and we're talking 11.5 to 12 on the Nasdaq. And here we're just, we're looking at this, we'll call it 1680 to 18. So we're just absolutely in a sideways range. These PPMs are set up to go, but if we don't get closing over the 40 on all of these index, over the simple 40-day moving average in the next, I would say next 3 days, and these markets are going to be in trouble. And it's all going to come down to, I believe, what's going on in the Dow, which I'm going to cover right after we go through the interest rates next. Okay, well, look at the 10-year. This is the daily. We saw it rally up. What I was talking about is that we're probably going to be in a sideways range on between 3% and 310. We should continue to go there. We might trade down to around 295. Let's go to the weekly because I think that's the chart that gives us the best feel here. Here we are. The 10-period moving average right now is at 299. So we're just hovering either side of that. We do have a negative PPM 1 at a minus 0.44. PPM 2 is up at a 1.89. So the most extreme, and I talked about this, I believe, in last night's video, but I really think we've got probably a range here of worst case about 285 to 310. We could trade as high as 320. And we'll find out if this situation with the yen is going to affect this as well when I go through the currencies here in just a minute. But this is really locked into this pattern, and we should stay between the 10, which is at the 3% with an extreme of that first R1 number, which let me bring that up here. R1's 319 and S1 is 3%, so S2 is 291. So I'm going to go with 290 to the potential for a 319 range just as we look at this. Overall, the longer term 21, 40 period moving averages are all very positive here and still in these uptrends. So we're likely just to get into this high level volatility. It's the same thing that we talked about in the Dow as well, but the Dow just keeps printing through, and I'll cover that next. So let's go ahead and take a look at the Dow. All right, this is the big story here. We're looking at the weekly, and the ranges for the weekly as we look at the market grid. 108 is R3, 108.55. The high is right now 108.47. So we're trading R3 on a weekly basis. RXT is 109.02. That's not far from here. You would think we'll stall in this range here. And if we manage to close back above R1 this week, which is 107.50, we just remain above that. And we're going to see the market grid turn up next week. We're looking at PPM1 is starting to accelerate. It's up 0.44, 0.57, and 0.36 on PPM1, 2, and 3 here. So this is just a really positive upslope here that's not going to go away. I talked about this last night that the upper projections here are we're looking at 111.60, 115. So those are big numbers. And let me bring up the yen here real quick. The yen right now is actually backing up just a little bit. 137.18. And as I've talked about, if I go over here to the weekly chart, you'll see this. This is the daily. If I go over to the weekly, you can see this monster move here. This is probably what's called a running ABC. So once we could trade back to the 10 period moving average, but I think it accelerates. And some of the numbers that are out there, I'm just trying to find this one chart that I looked at before that I showed you folks, is, you're looking at 140, I believe 141 to 145 is the target range on this. And if it gets there, at some stage, they're going to have to defend the yen, I would think. Right now, they're defending the 10-year JGBs, and they're also playing a yield curve strategy, which has got them locked into this pattern they're in. At some stage, I think they're going to have to try to defend the yen. And let's just talk about that for a minute, because I think not only is the yen have to be defended, but all these other currencies, what are they going to do? Are they just going to let this run away? And the problem with the currency market, and I talked about this before, is trying to control the currency market is just about impossible. The numbers are so big, there's not enough you could buy or sell or do anything. And that doesn't mean saying that these central banks and governments won't be hurting so bad that they won't try anything. So they may get a concerted effort with everybody trying to sell dollars and try to to knock it down. But in the end, it's not going to work. And this is what I've said before, is they're going to continue to see this Dow probably go into some of these crazy numbers at 111, 115, and it could go even higher. And I remember doing some analysis on a live stream way back, and I think it was in 2020 sometime, and talking about how the Dow could get to these levels, and it seemed ridiculous to even talk about it at the time. But here we are, and this is what's going on. And like I said, the whole destruction of the world is, I think if people and governments get desperate enough, they're going to do whatever they can to try to save themselves, or at least make a concerted effort. And I suspect even the Fed would be involved with that. So this is the big issue that we all know about, is that we've got the FOMC meeting coming up in a couple of weeks. We know everybody's talking 0.75. We've got inflation coming out. So we're getting everything loaded up here. So we're really at a breaking point here. And that dialogue I talked about, I believe last night or sometime in the last several broadcasts that I've done, is that at some stage, there's not going to be any way to hold back what's going on, and the inflation is just going to go, and everything's going to blow up. And at some stage, maybe you get the final capitulation and maybe a spike in the Dow, and then everything just falls apart from there. But it does appear, and it feels very much like we're at some kind of climactic point in history here at the moment. It's like everything's been stretched so far. It just feels that way. It doesn't mean that anything's going to happen, but there are some pretty big trigger points. Like I said, on the yen, probably around we'll call it 141 to 145 is the target. The euro could go to 97. It's trading at, I think, 100.6 right now. So we're very close to that parity trade. Everything is right on this edge that feels like everybody's talking about these numbers. So typically what you'll see is something penetrated and a reversal. But this is right where we are on the equity markets. Everything is right here on the edge. And if it breaks, it's going to be really ugly, and it's going to be really, really fast, and almost go into a panic phase of the market. So we'll see what happens here. I think everybody waits till Wednesday, and we'll find out from there. I think earnings start on Thursday with the banks on Thursday and Friday. Friday's got probably one of the most active potential days of the week, actually, after Wednesday. And then Friday, there's just a ton of banks and financial institutions that are going to be reporting earnings. So it's going to get very interesting. All right, we'll bring up the weekly crude oil. We're continuing to hover around this 21 period moving average. And I still think with the PPMs at 0.91, we should continue to hover around here. But we are starting to lose a lot of upward momentum. And as I talked about last night, really what I see happening is just remaining in this big, broad range. You can see that the market grid has kind of squared off. I call it the box formation. When it does that, it takes probably 3 to 4 bars. So in this case, it's going to take probably into August before we'll see exactly what's going on there. And that will be really key from the standpoint of what type of volatility and what kind of pattern it comes out of this. And then from that, we'll be able to determine whether we're just going in this big consolidation range up here, or we're going to roll over and maybe come into $85 or something like that. And that may have everything to do with what I was just talking about, as far as the markets rolling over. Maybe there's some serious demand destruction, and everything that's going on in the world all comes to a head. And I said it before, and this is with energy markets. It's with everything that we're looking at right now. Is, I still think when you disrupt the banking system, the world banking system, like we did when Russia got kicked out of everything, and now cash flows have changed between China, India, Russia. There's almost like two worlds here that have merged. And think about, at least with China and India, there's monster, 1.4, there's close to about 2.5 billion people in there, and monster economies. And so when you kind of separate that, even though China and India are playing in the others, it's just kind of disrupted the flow. And anytime you disrupt the flow, we saw that in the 2020 situation. When you take a switch and you turn the economy off, it breaks instantly. And I think that's what we're still seeing is cash flows on the planet have been disrupted. There's a bunch of dislocation of capital and how capital flows are happening, and everybody's trying to figure out how to make it work. And I think that's what we're dealing with here, and it's very uncertain, and I'm not sure anyone could figure it out. And like I said, we're at a tipping point, I believe, right now. We've been fighting this for the last 2 months as far as the patterns go. And if we don't get this rally, I'm talking about in equities, and we don't at least move up to 4,000, then there's going to be, we're going to see quite the sell-off from here. So just be prepared and be cautious with whatever you're doing out there. So next market we'll cover is gold. Gold is amazing that it's holding up. I mean, it should probably be 1650 right now based on what's going on with the dollar, but we continue to hover just above this 200-week moving average, which is right now at 1714. The low so far has been 1721 this week. So we're just sitting right here. And what's interesting is PPM1 is trying to stabilize here. We're still down 0.85, but that 10-period moving average is quite a ways above the market at 1820. So this market's just in big, big trouble. And like I said, if we get through here, if we go over to the monthly chart, all of a sudden you could potentially be looking at some serious down numbers. 1,600, 1,500 could get really ugly from here. We're closing through this 40-month moving average, and this is just potentially, I think, incredibly damaging. And maybe what this is telling us, this right here, might just be a confirmation that the dollar is going to get a lot stronger, because there's no way this market's going to rally if we continue to see the stronger dollar. Okay, final market to cover is Bitcoin. Bitcoin is actually, I'm going to call it amazing that it hasn't collapsed here, but it's hanging down here. We've got one of these formations on the, let me see if I can blow this up for you. Yeah, it's basically what I call a bubble formation. So when we look at this, we're just hovering right around the 200-week moving average, trading below it, but it's been very stable now. This is right now 5 weeks. We had one close. We got a STX buy signal on 6/19 that week, and now we've just been sideways, just under that number. And we're seeing a very mixed picture from the standpoint of how the PPM's looking. See, PPM 1 is actually trying to turn up. It's still got a lot of downward pressure. And I've talked about this pattern. When we get the crossover of the 10-week and the 200-week moving average, that's going to happen. Just looking at the rate of change here, that's most likely going to happen probably this coming week. And when that happens, typically when we get that crossover, it will actually be signal a short-term bottom. So if we get that could set up an interesting pattern. We'll watch this PPM 1 to see if it starts to get through its first and second derivatives here and set up a bigger pattern. But I've been really impressed with Bitcoin as far as it being stable here. It's been impressive, I think, because there's been a lot of reasons for it just to collapse down, but it hasn't done that. Maybe if we do get a lead and we get a breakdown of these market indexes, the equities, maybe it'll take it with it there. But I'm looking here at PPM 2 and 1, and they're looking like we're trying to set up a bottom here, and the stability will likely continue. I just don't see the breakdown. I've looked at, there's some weird Fibonacci projection right now for it to go to 8,000. I don't think that's real. I'm not going to buy into that pattern. It's been generated by some of the volatilities. But this is, I think, an impressive, I guess, stability that it's having here. Maybe, it's always was promoted as an alternative. Maybe I've said this before at different points in time. Maybe it'll demonstrate that it can be an alternative to everything that's going on, because if the dollar does start to crack here and all these things that are potentially going to happen, maybe, just maybe, Bitcoin becomes more important in around the economy. Especially, maybe there's a lot of money flowing in here. It looks like there continues to be a fair amount of flow coming in. Anyway, folks, this will do it for tonight. Thank you so much for watching, and make sure that you have hit the like button and get that. Make sure you subscribe. So I will talk to you tomorrow night, same time. Have a great day, and I will. Good luck trading tomorrow. We'll talk to you then.